Hello, it's Thane here from Mulcahy & Co Financial Planning, coming to you again just to provide you with an update regarding your superannuation and investments. Most of you are probably receiving your 2018 half-yearly statements about now, and for most of you, probably seeing a negative return for the first time in a long time. So I think we've discussed this in previous podcasts that since the 3rd of October or thereabouts, share markets fell by approximately 10%. And it hasn't been until the 2019 calendar year where investment markets have been able to recover those losses. So that's why you would be seeing a negative return for the first time in a long time on those investment statements. However, if you do generate the latest performance reports, you would be in positive territory, even for the short period of time of it being less than 3 months into the 2019 calendar year. So to give you some perspective, so for a conservative investor with the majority of their money invested in cash and fixed interest accounts, so for higher capital preservation and security, so up until the 31st of December 2018, they were probably experiencing a negative return of roughly around the 1% mark. However, we generate a performance statement up until the 20th of March 2019, they'd be in positive territory with a positive return of over 2.5%. So as you can see, in that short period of time, it has reversed. And yeah, I suppose if you extrapolate that out over a 12-month period or so, you can see that it would be a strong return. However, as we have mentioned before, we do expect that there will be high volatility going forward with investments, and this is part and parcel of investing. And the best way is to manage that by how much you do have invested in cash and fixed interest. And so for a growth-orientated client, so up until the end of 2018, they were probably experiencing a negative return of 3%. And then if we generate a performance report up until the 20th of March 2019, they'd be seeing a positive return of over 2.5%, more like 3%. So a growth-orientated client is typically someone with a time horizon of more than 5 years for investing, or greater than 5 years till retirement, and still accumulating money for typically retirement or education savings plans, etc. So I suppose some of the reason for the more volatility in investment markets going forward is that there is expected to be a bit of a slowdown in economic growth, which is possibly why you've seen a lot of conversations around property prices reducing, as gross domestic product for 2018 was around the 3% mark, and it's forecast to be more like 2% for the 2019 year. So the reason that share markets do become a little bit more volatile is that if people's house prices are falling, they don't feel as wealthy, and they start to save more money and then spend less on consumer discretionary items. So then the likes of JB Hi-Fi, etc., their profits are less because there's not as many sales. So then generally share prices fall as a result. And given that most of you will own some shares within your investments, that's the reason that the ups and downs obviously impact the performance of be it superannuation and investment accounts. So generally we determine ideal asset allocations for clients through client face-to-face appointments of determining clients' willingness to invest in terms of how comfortable are they with investing and what experiences they've had in the past. Also with their ability to invest in terms of how long is it until they'll be expecting to receive the money, what is their investment time horizon, what type of income streams that they want in retirement, etc. And then we also consider this with expectations of economics and economic growth and investment markets going forward. So we send out these half-yearly statements to you to keep you informed and up to date. So if you do have any questions, by all means, feel free to contact us. We don't send them out to scare you or alarm you. But yeah, look, if you do have any questions, by all means, feel free to get in touch. As our whole objective is to help clients achieve financial security. So thanks very much for your time. And if you do have any questions, we look forward to hearing from you. Other than that, we'll talk to you in the near future. Thank you. Bye.